Today is Friday, the 30th of September, 2011, and I want to go over three different things in which a sentiment of mine has completely changed over. Two of which the sentiment really did change over. First one's about football, and this video has nothing to do about football, but the point of this is about sentiment. On Saturday, January the 1st, 2011, for the first time ever, I was impressed with Matt Cassel of the Kansas City Chiefs as an NFL quarterback. I labeled Mr. Cassel as a game manager and maybe one of the best of all time for that role. A game manager is one who protects the ball and makes the plays happen now and again. There has been 5 games for Mr. Cassel since I stated this, and well, since then he has thrown 10 interceptions, 3 touchdowns, been sacked 13 times, and 1 fumble, while only having 613 yards in 5 games. If you don't know much about football, that's fine, but he went from having a pretty good start to really just being pathetic, and that's the best way of putting it. So I guess you could say my sentiment was wrong. And another one was within the Dow Jones Industrial Average. When we broke past this resistance level here at roughly 12,450, for the first time ever, I was now bullish on a nominal level within the Dow Jones. Of course, this is right where the market ended up topping and what could be a very much severe top as we move into October. Now, the reason why for this was because it really showed me that a break above here was telling me that the selling that occurred in the year 2008 was that of a failed move. And oftentimes from failed moves can create fast moves in the opposite direction. Therefore, I know the opposite direction of lower is higher, and well, I was kind of expected throughout the months and years that we would not only be breaking the 14,000, but breaking 20, 50,000, maybe even 100,000. And all because of inflation, but the point is I labeled this bullish in here, and look what happened. And well, I said a failed move is guaranteed, and just maybe this is the failed move in here, and it's actually much bigger than that when you look at the longer term time frame. But with that being said, it's probably time to watch out. And this is really going to be my final stock market warning for this conjunction period, whatever you want to call this. You can call it a bear flag, whatever name you give, it really doesn't matter. But the longer you are in a range-bound market, which is really sideways, then the bigger the breakout or breakdown tends to be. And the more volatile the range is, again, can make the breakdown or breakout really big. Well, the volatility is massive. And it's been in this range now since really the start of August, so 2 months within this range. That in itself should be a major fright for people, but then it all depends on what your decision on how you want to deal with your finances works into play. Now, as far as the third one, I'll go over that one at the very end of this episode. So let's move on to the silver market, and we're taking a look at the 6-hour or quarter-day chart. And well, we've had this crash, and since then, the market managed to come up to this really massive point. Forget this line for the most part, because within multiple time frame analysis, the more larger level is that of $33.58, which pretty much was an exact hit as resistance earlier this week. And then the market came down to the 29 and change and is really settling in within the 30.50 level. Therefore, when you look at the 5-day period average band, it's been resisting the 5-day moving average the entire time since it's gotten up there. But the direction of the 5-day moving average has also changed. It has went from a downtrend to, well, it's still technically a downtrend, but it's pretty much flattened out as the market has really gone sideways within this band. So I mentioned the 3050 to be a significant Fibonacci level, and that already is, which is why a lot of the times it's going to hit like almost every single time, but that still may not do you any good. And as far as like on a trading level is concerned, well, if you bought in at 3050, question is, did you survive this plunge down here? And it's not really a plunge, but it's also very common for significant areas to be pierced on one side or the other. And the question is, are you going to profit take it in here? I mean, you buy at 30.50, you're going to sell at 31 after you took a hit down to 29? I don't think so. So even though these things hit all the time, that doesn't necessarily mean you can always get the greatest play within it. Now, as far as the next significant Fibonacci level is concerned, we can take these highs, and I'm just going to eyeball them because I think I know them offhand. I think it's like 33.50. I'm trying to get it off my head. I can look reference it, but it doesn't matter too much. We'll go 33.54 divided by 26.10. I know that's the low. And we'll put this now to the power of 38.2%, which is a 61.8% down move. You can multiply that by the low, which is 26.10, and if it doesn't hold the 30.50, we'll be headed down to about the 28.72 level, which has got some relevance to it already, which is pretty much, let me get a straight line right in here. It's a big line. Now the move that occurred, let's just do another straight line, but the move that occurred a few days ago when it went below or around 29, we can see was more of a pierce towards this level than it was a pierce from this level. Therefore, we've already had one test within this level, but overall, if it holds this level, this is a failed move, which is very common, especially because it's only a small failed move, which should result in a fast move really breaking past this resistance point, maybe up to the 35 level. That's, of course, if it can get going. Because if this is that sideways correction within the counter trend and then boom, we plummet lower, then that wouldn't be much of a surprise. But this is more short term. I want to take a look at this on a more longer term perspective. I'll show you what I think is ideal within the market and then what I think will actually happen. And this is the quarterly term time frame. And basically what I think would be ideal would be the following. Over the next few days, maybe into October the 7th, October 10th, to have a small uptrend, but nothing major, maybe come up to 35, 36 in that area. And then as everything goes to what people would call hell in a handbasket, stock markets plummet big and all that type of stuff, maybe we'll have a small correction down towards this 20 level, 19, 20 level. People will be panicking, people will be scared, people will be saying, I'm selling, I'm selling, I'm selling. I thought this was the play of the century and I was lied to. And well, they can think whatever they want. I don't care. So we go down to 20, we'll let everyone panic, we'll get all those people who are scared out of the market, and well, if you can buy any more, then yeah, that's what I would do. And then what would be ideal would be that in early part of November, the dollar actually physically collapses and well, silver just pretty much skyrockets to the upside. Everyone panics and we can somehow start this recovery very soon because we need to kill the dollar in order for there to be a recovery. The dollar needs to be killed for this to be the case because it is the extreme major reason the economy and humanity culture is in extremely rough shape as it is today. Okay, now I don't think that's going to happen though. That would be ideal. I hope it happens, but I don't think it will. Because as of roughly around 7:30, 8 p.m. Eastern Time on September the 29th, 2011, which is about, I don't know, 14 hours ago as I'm recording this, I have decided that the end date for the Mayan calendar, which I was feeling would end sometime between October to like January of 2012, or pretty much now. I'm not buying that anymore. No. See, I was always bullish on it being shorter and not later. Well, that changed because now my expected end date is between mid to late of the year 2013, which would give us pretty much another 2 more years before the Mayan calendar ends. I'm not going to explain why this to be the case, but it's actually reliable information using the numbers game. But the numbers were used for Matt Castle when I thought he was a solid quarterback. I used the numbers to tell me that I should no longer really diss the guy so bad, because I was bad. Ever since Matt Castle came in the league, I was not giving him really any support whatsoever until January 1st of this year. And then that's because of the numbers told me, and boom, it went down. Same thing with the Dow Jones. It was purely 100% on the numbers game, the Fibonacci math, and right after that, boom. And, the reason why I'm picking mid to late 2013 for that end date to be is, because of the numbers. And that's pretty much all I need to say. So now I'm kind of freaked out that it kind of will end very soon, and I'm going to quickly go over what I would expect the economy to look like near the end dates. This screen is a timeline, and there's not much to it, but we're definitely below this area here. When we start in here, there would approximately be about a month and a half before the Mayan calendar ends. At this point, the world should look nothing like it does, even for that matter, today, but very close maybe to that of today. Currencies are either just recently have passed away, or are in the moments of doing such a thing. World's going through major changes, and those who have silver and gold are fairly happy with the situations. As the economy collapses within this time frame, there's going to be a lot of confusion, a lot of rough bitterness within the world, and people confused to really how things are going to play out until you reach this line here. That's when the confusion will get away. As far as the bitterness and stuff like that, no, that may not end. But the confusion should end in here, merely because we're moving into a stage where, from my research, consciousness should be at a stage of at least understanding things a heck of a lot better than we do today. We reach this point here. Well, that's where we have a day left to this blue line, which I call 13 seconds of infinity. This is where the world pretty much goes through massive changes, like one could not even imagine. And the economic recovery cannot even start, and should start exactly as this blue line comes to an end, or at the very middle part of this blue line, or exactly when the Mayan calendar comes to an end. And in order to have that recovery, well, we need to get away from all of the evil economic systems that we currently have, and the fiat currency is most obviously one of them. Now, as far as what happens on this side compared to this side, it's definitely not as easy. So I'm only going to say a few words in one sentence for what's going to happen here. What will happen after this line, after the Mayan calendar ends, depending on whether it's late this year, early next year, 2013, 2014, I don't know. But when we get to that point, we will have the exact polar opposite from here to here that we had from here back in there. Thank you for tuning in, and have yourself a great day. Bye-bye.